What's up YouTube? This is Cody and welcome back to my YouTube channel, The Cash Flow Phantom. I'm going to give you my 5 top real estate plays you can make in 2025 even with $0. If you're hustling but you don't have much cash flow at the moment, then this could be a play that you make. And stick around for number 5 because it's my hidden gem and one of my favorites. Let's go. Play number 1, seller financing. This is where the seller becomes the lender. With today's bank rates being higher than ever, people want to forego banks more than ever. Instead of a bank, the seller becomes your lender. You can forego all the red tape, make payments directly to the homeowner. But here's why it works in 2025. Banks have really tightened lending and rates are higher than ever. For you to approach a tired landlord who's ready to get rid of his property and see if you can work out a zero money down seller financing offer. Example, you buy a $150,000 rental for $0 down, then you make $1,000 payments to the owner for 15 years until it's paid off. They're happy with the cash flow and you get cash flow plus appreciation. Number 2, lease option. A lease option gives you control without ever owning the property. So you come up with an agreement, a lease option with the homeowner. You can then rent it out or make improvements and then sell it within the agreed time limit of the contract. Here's why this works in 2025. Many homeowners can't sell quickly, but they still need cash flow. Essentially, the lease option creates a win-win. They get a tenant that's paying for the property and improving it potentially, and you get a property to monetize without ever having to go to banks or all the red tape or get credit checks. An example of this would be you could lease a house for $1,200 a month with rights to purchase at $200K in 2 years. After improvements, you assign the property to an investor and make a $20K profit. Play number 3, a novation agreement. So a novation agreement is basically where you step into the seller's shoes with rights to sell the property. Then you market it on the open market. You have a baseline agreement with the homeowner, and then you have the amount that you sell it for on the open market, and you keep the difference. Here's why this works in 2025. There are homes everywhere that need to be sold, but they can't qualify for traditional financing because the homeowner can't make improvements to them. They can't afford it. So basically, somebody comes in, like me, to make an agreement with them to maybe make a few small minor improvements, but basically take the property and market it to investors and on the open market and get them closer to what they would want and higher above a wholesale price. An example of this would be an older couple that wants to downsize. They move to another house, they're paying that bill, they're paying the old bill at the other house, but they don't have money to improve it to list it on the market. On the markets where most people are trying to finance something traditionally, like with an FHA loan. I come in, get the property, clean it up a little bit, don't put much money into it, but put it on that open market and negotiate and market it as a different product. Not as a brand new house, but something to an investor who wants something above your regular 20, 30K wholesale type of house. Play number 4, wholesaling. Get a homeowner under contract for their property, house or land, and you have a clause in there saying that you can assign the property. You then take it and assign it to an investor for an assignment fee. Why this works in 2025? Well, it's worked for quite a while. You have skip tracing tools, property data tools, and a lot of stuff to make good marketing decisions and outreach to get a lot of properties under contract. An example of this would be finding an old vacant home from a tired landlord, getting it under contract for $20K and selling it to somebody who flips and rehabs property for $30K and you keeping the $10K assignment fee. Number 5, and this is my hidden gem, surplus fund recovery. So when a house is in foreclosure and goes to auction, When it sells at the auction, whether it's a sheriff's auction or at the courthouse, the money that goes over the debt owed is due back to the property owner. Now here's the thing, the gap in information is that many don't know this, and the county does a terrible job at notifying. With skip tracing tools and property data that's available online now, you can get in contact with these homeowners, let them know the process, and work out a deal with them to collect their surplus funds for them on the back end. That's where you collect your success fee. So you don't get paid unless they get paid. It's a win-win. An example of this would be an estate where a property sold and the 2 or 3 kids that are heirs of the property have no idea. You contact them and let them know they have funds available. Get all 3 on an agreement, pass it to your team, whether it's a lawyer or not, and get the file claimed. Once you collect the funds, get the checks dispersed and collect your fee. These have been my top 5 real estate plays that you can make in 2025 with little to no money. Thank you for tuning into my channel, The Cash Flow Family. This is Cody Melton. See you later.